All right, so the markets have been an absolute roller coaster lately, right? And if you've been watching the news, you've seen the headlines. They're all pointing the finger at one thing, crypto. But is that what's really going on? Today, we're going to dig past all that noise and find out.
I mean, it seems like every major media outlet is pushing this narrative that crypto is the big bad wolf here. But what if the data tells a completely different story? Well, let's dive in and see for ourselves. Okay, here's how we're going to break it all down. First, we're going to look at what feels like a coordinated attack on crypto. Then, we'll zoom in on MicroStrategy, the company at the center of the storm. After that, we'll hunt for the real culprit behind the sell-off. Check out a huge surprising move from a financial giant. And finally, we'll tie it all together to see the big picture.
You know, over the last little while, it's really felt like a campaign against crypto, coming from pretty much all sides. And they are all singing the exact same tune, which is pretty convenient, don't you think?
I mean, just look at who's pointing the finger. You've got JP Morgan basically suggesting that companies holding a lot of crypto should be kicked out of major indexes. You have the S&P 500 releasing a report on Tether that only focuses on the negatives. Bloomberg's running these huge headlines that flat out blame crypto for the entire market drop. And of course, the politicians are jumping in, with a renewed push to label crypto as securities. It's a full-court press, creating this story that crypto is unstable and it's causing all the chaos.
So, right in the middle of this whole firestorm, you have one company, MicroStrategy. And because of their unique, massive bet on Bitcoin, they've become the perfect lightning rod for all this criticism.
Now, the way critics frame this is actually pretty clever. They put MicroStrategy on one side, with its all-in on Bitcoin model. And on the other side, they put up the investing titan, Warren Buffett's Berkshire Hathaway, with its super diversified portfolio. The argument they're making is simple. Betting the farm on one risky digital asset is reckless, while buying bits and pieces of many established companies is smart.
And this narrative gives a ton of ammunition to longtime crypto skeptics like Peter Schiff. He comes right out and says it. Warren Buffett is not a scammer, but Michael Saylor is a fraudster. It's a really bold and personal attack, framing this not just as a bad strategy, but as an actual fraud. But then, the narrative hits a major snag. Despite all that pressure causing an initial drop, MicroStrategy announced it had a huge cash reserve, enough to cover its dividend payments for almost 2 years. And the market's reaction? The stock absolutely rocketed up 11% from its lows in a single day.
So much for that story.
Okay, so if the attack on MicroStrategy didn't stick and it didn't cause the crash, then what did? Well, it turns out the answer has pretty much nothing to do with crypto at all.
The real shockwave didn't come from Wall Street or some crypto exchange blowing up. No, the real trigger, the earthquake, started thousands of miles away with a huge policy shift from one of the world's most important central banks.
And here it is, the real catalyst, the Bank of Japan. See, for years, investors have been borrowing Japanese yen for next to nothing to fund all sorts of risky trades around the globe. When the BOJ suddenly signaled that they might start raising rates, the free money party was over. That cheap funding dried up, forcing a massive worldwide sell-off of the riskiest investments. And what's at the top of that list? Crypto. It just got hit first and hardest.
Now, this is where the story gets really fascinating. Because while all this public criticism and media noise was going on, something completely contradictory was happening quietly behind the scenes with one of the biggest players in finance.
Just let that number sink in for a second. $9.3 trillion. That's how much money is managed by Vanguard, one of the largest asset managers on the entire planet. And historically, they've been a huge crypto skeptic.
So in a move that is just stunning, Vanguard, the very same company that was actively blocking its customers from buying Bitcoin ETFs, has done a complete 180. They've now opened the door for their clients to get exposure to funds that include assets like Bitcoin, XRP, and Solana. This is not a small change, it's a massive institutional vote of confidence, and it's happening right in the middle of what the media is calling a crypto-induced crisis.
So, the crucial point here is this. When we zoom out, we can see pretty clearly this wasn't really a crypto event at all. It was a macroeconomic event that affected, well, everything.
And the data proves it. It wasn't just crypto that fell. Small cap stocks actually got hit even harder. The giant tech stocks sold off, and the most heavily shorted stocks just completely collapsed. When you see every single speculative corner of the market get hammered at the same time, that is the clear signature of a systemic event, not a problem with one specific asset.
If you follow the money, the story is just as clear.
Net flows for Bitcoin ETFs were basically flat, which means the big institutional holders were not panic selling. At the same time, capital was rotating. Assets like silver actually surged to a new nominal record high. This points to a broad reallocation of money, not a crypto-specific freakout.
So, as we wrap this up, we're left with one really important question. In a market this complex, what do you pay attention to? Do you follow the loud media noise and the scary headlines, or do you follow the quiet, deliberate moves of the world's biggest financial institutions? The answer to that could define your entire strategy moving forward. If you found this video helpful, be sure to smash that like button and subscribe so you don't miss your next daily edge. More news in our Telegram channel in the first comment down. See you next time.